Okay, so it looks like we've got everyone now. So good afternoon, everyone, and thank you for joining us today. My name is Jess, and I'm an employee support supervisor. And today I'll be covering some of the important information about the end of the financial year and any changes expected in the new year. If you have any questions during the webinar, please leave your question, name, and number in our chat option, and we'll make sure that someone contacts you after the webinar to address any queries or concerns that you have. So during this webinar, we will discuss your P60 for the tax year 22 to 23 and when you can expect this to generate, any changes in tax allowances and thresholds for the tax year 23-24, and finally, how you can use your salary sacrifice pension to save on tax and national insurance deductions. So your P60 shows the tax that you have been paid on your salary in the tax year. That's from the 6th of April to the 5th of April. And if you're working for an employer on the 5th of April, a P60 will generate to inform you of your earnings over the tax year, as well as the total sums paid and employee national insurance contributions. Therefore, you may use your P60 as proof of tax paid during the financial year. You may wish to use your P60 to claim back overpaid tax, apply for tax credits, or as proof of income if you apply for a loan or a mortgage. For the tax year 22 to 23, the P60 will be made available on your employee portal by the 31st of May this year. For anyone requiring P60 information more urgently than that, we encourage you to review your final payslip in the financial year, as this contains the same information as a P60. At Giant, we will generate a P60 for all workers that are actively working and receiving payment on the 5th of April. This means that if your P45 was issued prior to this date, we will not generate a P60 for you, as a P45 already has all of the information, such as your income to date and your tax paid. If you believe you are due a tax rebate, you can use these details found on your P45 to support your claim with HMRC. If you are leaving Giant, please ensure you've downloaded your P60 from your employee portal, which can just be found under payments and then payslips. So in the financial year of 23 to 24, the personal tax allowance will remain the same at £12,570 per year, and that's the tax code 1257L. This means that from your annual earnings, the standard tax-free allowance will be £12,570 annually, which is £241.73 per week and £1,047.50 per month. Earnings above these amounts will attract tax at the appropriate percentage. In the new financial year, the basic rate tax threshold, which is 20%, will be applied on weekly earnings up to £996.75 and monthly earnings up to £4,189.25. This means that so long as you earn below those amounts, you will be taxed at only the basic rate of 20% after your weekly or monthly tax allowance has been taken into account. If your employee gross amount exceeds the value mentioned, then the additional portion of your earnings will begin to fall into the higher rate of 40% and additional rate 45% tax brackets. The biggest change to tax for 23-24 is the additional rate of tax threshold, which is the 45%, and that's been reduced from 150,000 to 140 pounds. In the tax year 23-24, the tax week will run from Thursday to Wednesday. This means that if you're paid on a Thursday and then you're paid again on the Monday, your two payments will fall within the same financial week. And we highlight this as a caution because of supplementary runs, which is when you're paid more than twice in a financial period. And we only receive one amount of tax allowance per week. So if you receive two payments, you're going to be paying a higher rate of tax. Therefore, please ensure all timesheets are submitted and approved on time, so payments flow in a weekly or monthly schedule. So the tax month runs from the 6th to the 5th, which is as per usual. And finally, the first payroll in the tax year will receive a 1 week or month tax allowance, irrespective of how many weeks or months are being paid. As an example, if you are paid on the 8th of April for 3 weeks worked in March, the tax allowances for March will not carry forward, as we've entered a new financial year, so any allowances from the previous year will no longer apply. This may lead to slightly more tax being paid on your first payment, as more of your income would become subject to taxation. However, if you're on a cumulative tax code, you would expect an adjustment taking place as the financial year moves on. This would not be an immediate adjustment. However, taxes typically adjust in accordance to income earned to date during the financial year. Please note that tax is calculated when you are paid, not when the work is completed. So we will not be able to retrospectively apply tax allowances. Now we'll move on to national insurance discussions. So last year contained a high amount of change for national insurance, but thankfully this year there's almost no changes to NI. The change which was announced in the September budget is that the health and social care levy has now been cancelled. So national insurance is a statutory deduction, and therefore there are no exemptions to paying it unless your earnings are below the lower earnings limit of £9,564 a year or £797 per month. This table confirms the most common national insurance categories and the employee rates you will contribute based on what you earn weekly or monthly. Currently, if you earn above 242 per week or 967 per month, you will pay national insurance deductions. So here we go on slide 6, we have employers' rates. On the employer's side, there's a contribution of 13.8% from the assignment income. That's the income that we receive from your agency or client when the earnings are above 175 per week or 737 per month. Purpose of your national insurance is to contribute towards funds like state benefits, which include state pension, statutory sick pay or maternity leave, or entitlement to additional unemployment benefits. So following on from these deductions, you may wonder about how you can make savings on these deductions. Workers through Giant have the option to contribute towards a salary sacrifice pension, which will receive the benefit of savings on national insurance and tax contributions. Salary sacrifice scheme is an arrangement where you give up a proportion of your salary and effectively reduce your pre-tax salary by a proportional amount, resulting in a reduction in your PAYE tax. Also, as the salary sacrifice amount is retained prior to the calculation of employers' national insurance and the employee gross pay, you will find a reduction in both the employers and the employee national insurance contributions. In this current financial year, a basic rate taxpayer can expect to see savings of up to £460 in tax and national insurance costs by participating in a salary sacrifice scheme and contributing £1,000. Whereas a higher rate taxpayer would see savings of £560 if they were to sacrifice £1,000 as well. If you wish to receive more information on salary sacrifice, please contact the ESO team via your employee portal using the live chat function, or you can message via the portal in the top right corner. If you wish to utilise our salary sacrifice scheme, you'll need to move across to the Giant Premium package. The net margin on this package is £39.50 per week, which works out at £20.14 after tax relief. And in addition to the ability to participate in salary sacrifice, the premium package also includes useful features like Giant Advantage, which is our cashback and rewards scheme, faster response times, and private healthcare insurance. So in summary, we hope you take the following points away with you: that your P60 for 22-23 will be available in your portal by the end of May. Your standard tax code will remain the same, 1257L. The tax week will run from Thursday to Wednesday, and the tax month from the 6th to the 5th. The employee national insurance contributions are 12% above 242 a week and a further 2% above 967 a week. The employer's national insurance contributions are set to 13.8% on earnings above 175 per week. From April 23, national insurance contributions will remain at the current rates, and the 2022 social care levy has been cancelled. And finally, you can make additional savings by contributing to a salary sacrifice scheme. So that does conclude our webinar for today. We hope you found the session useful. If you have any feedback or suggestions on how we can improve this service, please let us know by completing the survey after the webinar. And should you have any questions further down the line, please contact our support team via your portal or via live chat, or you can give us a call on 0207 167 4438. And thanks again for joining. It was appreciated, and I hope you have a great day. Thank you.